Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, December 19th, 2025, and here is everything you need to know as the markets close for today. The Indian markets finally snapped a 4-day losing streak, staging a smart recovery to end the week on a high note. The benchmark Nifty 50 closed at 25,966, up roughly 0.58%. The Sensex gained over 400 points to finish at 84,929, while the Bank Nifty settled at 59,069, adding about 0.27%. The sentiment today was undeniably bullish, driven by renewed optimism around global rate cuts following soft US inflation data, which triggered broad-based buying across mid and small-cap pockets. On the currency front, the Indian Rupee strengthened against the greenback, closing at 89.88, pulling back from the 90 levels we saw earlier this week, which provided some relief to foreign fund flows. In terms of top movers, Shriram Finance was the star of the show on the Nifty 50, surging over 4%. This move came after the company's board approved a massive investment of nearly 40,000 crore rupees from MUFG Bank, which is a huge vote of confidence. Among the broader market, Ola Electric logged in a 10% upper circuit after news confirmed that the founder monetized a stake to fully repay promoter-level loans, clearing a major overhang for the stock. On the losing side, HCL Technologies dipped about 1.2% and Hindalco saw marginal cuts, but overall the bears were largely on the back foot today. Looking at key levels, the Nifty 50 successfully defended the critical support zone of 25,900. It tested this level early in the session and bounced back sharply, which is a positive sign for bulls. The index is now knocking on the door of the 26,000 mark. Bank Nifty, however, remained a bit indecisive, hovering near 59,000 without a decisive breakout, indicating that traders are still waiting for a clear direction in the banking pack. Sector-wise, the real action was in the broader markets. The Nifty mid-cap and small-cap indices outperformed the benchmark significantly, rallying over 1% each. The financial services and auto sectors took the lead today, buoyed by the Shriram Finance news and Ola's recovery. The IT sector was the weakest link, dragging its feet slightly despite the positive global cues. On the regulatory front, we had a major development in Parliament today. Finance Minister Nirmala Sitharaman introduced the Securities Market Code Bill 2025. This historic bill proposes to merge the SEBI Act, the Securities Contracts Regulation Act, and the Depositories Act into a single unified framework. This is expected to simplify compliance and improve the ease of doing business in our capital markets, a long-term positive that the market seems to be pricing in. Moving to commodities, gold prices on the MCX cooled off slightly, trading around 1,33,850 rupees per 10 grams. Silver, on the other hand, held its ground, trading firmly around 2,03,750 rupees per kilogram. The cooling in gold is largely due to the risk-on sentiment in equities today, as investors rotated capital back into riskier assets. Geopolitically, things were relatively quiet, but the focus remains on the US Federal Reserve's reaction to the latest inflation prints. The softening data has reignited hopes that the Fed might be more aggressive with rate cuts in the coming year, which acted as a key tailwind for emerging markets like India today. Technically, the Nifty 50 has formed a bullish candle on the daily charts, closing near the day's high. For Monday, the immediate resistance to watch is 26,020. If we cross that, we could see a swift move toward all-time highs. Support is now firm at 25,800. Bank Nifty needs to cross 59,200 to regain momentum. Otherwise, it might remain range-bound. Here is your actionable takeaway. The momentum has clearly shifted back to the bulls, especially in the mid-cap space. Watch for a breakout above 26,000 on the Nifty early next week. If that happens, high beta sectors like realty and NBFCs could offer the best risk-reward setups. Stay tuned for tomorrow morning's wrap and send in your questions.